I have only $200 in my trading balance while the rest of the funds are safely stored in my safe earning interest. My goal is to grow this $200 account into $10,000 step by step over next 7 to 8 session. This is day 1 of the challenge, how far I can grow this $200 starting balance today. Let's find it out. For this challenge, I'll take only calculated and disciplined risks. Every trade I placed will be explained so you can understand the logic behind each entry. I'll be using just one indicator throughout this series, the exponential moving average EMA. The settings are very simple: indicator moving average, and you have to select EMA, and the period, the value would be 22. No complicated setup, just clean strategy with proper trade management. And here I can already see a clear trade opportunity, which is why I've placed directly call entry. Now you must be wondering why I have placed a call entry here. Let me explain you with the help of screenshot. Here you can clearly see we have got a breakout from our moving average, and again candle tested our moving average with a hammer, and the next candle was a healthy bullish candle. This last green candle was my confirmation, and now I'm expecting the market to go up. This is a high probability trade setup that market respects very often. Whenever the EMA 22 is tested correctly, it can provide excellent trading opportunity. This is one of the strategy I personally rely on for many of my trades because of its consistency. And as soon as I entered the trade, the market immediately started moving in my favor. I risked $50 on the first entry, and it turned out to be a clean winning trade. A great start to $200 to $10,000 challenge. I will not be placing any more call entry in this particular currency pair because now I will wait for the next candle to come up to our last green candle 50% as a retracement, because market has already given us an impulsive move to the upside direction. So I have to wait for some confirmation. So rather than placing impulsive trades, I will wait for another good opportunity. I've already increased my trade amount to $96. This will be my second step compounding, but let me tell you, I am not doing any compounding challenge. I will take calculated risks. So now I will take a trade to the upside after closing this candle because I can see a sweep happening here. I will tell you the logic, but right after this candle I'll place my call entry first. So after closing this candle, this is a very healthy green candle without any lower wick. There's a very tiny bit of lower wick, but it doesn't really matter because this candle is already very healthy. Now you must be wondering what is the logic behind this trade. As you can see, we've got a breakdown from our moving average, and candle actually gave us a put entry call, but after a certain move, you can see market has given us a double bottom, just a little bit of sweep. Market did not go down, rather it gave us a healthy bullish green candle. So that was my confirmation, the sweep and the moving average breakout, two confirmation. Because of this, I am going directly with my call entry right at the opening of the candle, and this is another high probability trade setup. Let's see how this candle closes, and according to that I'll place my next trade on the same chart. Let's see if this candle closes as a medium size green candle, I will place another call entry, but if it doesn't, then I will wait for confirmation. For now, this has closed as a spinning top, and as you all know, a spinning top can reverse the market. This is not a very healthy green candle, and also that candle has closed inside the wick of the previous green candle. Even though this is a winning trade, I will not be placing any more trades in this particular currency pair. That was my second winning trade. Now I will increase my trade amount to $120. As I already said, I'm not doing any compounding. I will just take calculated risks. And now I can see a trade opportunity going on here. Market gave us a breakdown from a moving average with a strong red candle. But you have to notice one thing: the market current trend is bullish. That is, market has been bullish for a longer period of time. So now we need at least one retracement candle, a green candle that tests our moving average, and that candle will be considered as my retracement candle. Even though there's a breakout, but immediately I haven't placed any put entry. I need one solid green candle, either a hammer or a spinning top, or a rejection from a moving average. If these three conditions are met, I will be taking my put entry. Let's see how this candle closes. We don't want any breakout from our moving average, and okay, that was a perfect candle. This is not a healthy green candle. This is a sort of spinning top, and right after that candle I've placed my put entry because now I can consider this green candle as a retracement candle. After the market has given us a breakdown, a red candle from our moving average, the last green candle, I will consider that as a retracement candle, and this is a valid trade. Even though the market looks very bullish, but this trade is valid because my moving average, that is 22 period exponential moving average, is very strong while giving accurate trade signal. And because of that, look at that, as soon as I entered my trade, this is already going in my favor. This is the third trade of the day, and after closing as a win, my $200 account will grow by 122%, bringing my balance to 400 something, $445. That's a solid result for day one. I'm going to take one more trade carefully selected, and let's see how much further I can grow this account before ending today's session. I have now increased my stake to $200, so the next step is to wait patiently for another high probability trade setup. All right, so let's find out that perfect currency pair. And here we have a very similar market condition. The overall trend is bullish, and on this currency pair, the EMA 22 has been already tested twice with red hammers. Right after that, we are getting a very strong bullish confirmation candle. But there's one concern here. There are multiple previous reversal points nearby which could cause some resistance. Because of that, I'll use my marginal safety entry instead of entering immediately call entry. I'm looking for a call trade right now after this current green candle closes. Let's see how this candle closes. I will go with my call entry if the candle comes a little bit down. Alright traders, as you can see, this candle closed as a strong bullish candle, and now I have placed my marginal safety call entry. This is a valid trade because the overall market is still bullish. We had a strong bullish breakout and the EMA 22 was tested twice by red hammer candles, and then we received a solid bullish confirmation candle. This was the breakout, correct, and then again market tested by two red hammer, and then the confirmation candle was our bullish candle. The only concern here is that there are multiple reversal points previously on the left hand side on the chart. That's why I decided to use a marginal safety entry instead of entering immediately. Even though this setup is valid, but there's still a chance that market could print one bearish candle before continuing higher, and if the price closes above my entry, this trade will be a winner. But if it closes below my entry, I will take the loss and I will have to take my one step martingale trade. So let's see. All right, so this trade was a loss, but I'm going to stick to my analysis and I'm going with a call entry. I'll take that red candle as a retracement candle because market has already retraced the moving average twice, and we have got a solid bullish candle. So I took four trades. One of them is lost, that is $200, which is very unfortunate, but I've taken the same trade again for the recovery. This should be a winning trade. The trade is still valid even though I lost it, but I am anticipating that this trade is going in my favor. So let's see how this candle closes. You know, guys, sometimes even when your analysis is correct, the market can still give you a losing trade. That's just a part of trading. The key is to stay disciplined, trust your strategy, and avoid making emotional decision. As you can see, this trade eventually is moving in my favor, and this is going to be a winning trade. With that, I'm ending my day one of the challenge. I started with $200 and finished with $429, a solid gain for the first session. If you'd like to follow along and copy my trades, you can create a pocket option account using the link mentioned in the description box below. I'll be back soon with day two of $200 to $10,000 challenge. Until then, keep learning and happy trading, guys.